This is Rod Kusanen, Spooman for Risk on January 19th and 20th, 2010. We're looking at our premium chart, and we're focusing our attention only on what the premium had indicated for us, not only on the 19th, but as well as on the 20th. We're only going to have time to just discuss the premium setups here, and we'll leave it go at that. Now, just a couple of things. As normal, you need to read our premium rules that is on our website, RSKsys.com. Go to the premium section, read the rules. You'll understand why we're saying what we're saying. Now, here's the setup. As the market was rallying up on the 19th, okay, we got an unsatisfied premium low right here. Now, we were looking for the Spoos to retrace down to 1137.50 or less. So we'll just put in a horizontal line there at 1137.50. That's the target. The market was rallying up. We had some unsatisfied premium lows. We had this first premium low here at 37. But then a little later, we had this premium low at 37.50. This premium low nullifies the previous premium low. Okay, so we're looking for the Spoos to drop below 37.50. So then if it rallies up, we just look for a short trade. Okay, so what happens? The market rallies up. We get our last premium high here at 1140.50. So now we're looking for an opportunity to short this rally. But it doesn't happen. We short it around here. We get stopped out. We short it up here, 42.75. Roughly speaking, we get shut out again. The market continues to rally up. Now, late in the day, the premium goes up again. Now, this is interesting. We have a new high on the premium right here. Spoos are at 44.50. They don't go any higher. They do drop a bit. Opportunity for a long trade. Obviously, Spoos are rallying, so a little bit of a scalp there would make 44.50 the goal, dropping down here at around 44. Not much to work with, okay? Well, maybe you could get it, pull a point off of that. 44.75, and the market rallies up, but then look what happens the following day, today, the 20th. Sure enough, the premium predicted 1137.50, and you saw the open this morning, and we were right down there at 1137.25, 1137.50 before the market continued to sell off. So was the premium wrong? No. The premium, in fact, was right on. It just took all day, and unfortunately, unless you were trading the overnight market, you didn't see an opportunity to capitalize on that trade. But now let's turn our attention to what happened today. We bring ourselves into today and notice what we have in the way of setups. Pretty much out of the gate, at 846 we get an unsatisfied new low on the premium. 847. That associated with NASDAQ premium here. And what happens? The market rallies up. Now, for those of you that have traded with us for a while, you know that a new high on the premium simultaneous with a new low on the day means an immediate rally. However, you can't forget the fact that there's a new low on the premium as well. So, where are you going to short this market? because here's the goal. Here's your initial goal. It's coming back down to 33. But there's a new high on the premium, so naturally you go long. Here's another new high at 35.75. It's going higher. It does. Then it hits another new high at 11.37. Even. It goes higher. And as soon as it's as soon as it's reached that new high, there's nothing left. Look for an opportunity to short the market, and that works for a nice 4-point move. Nice 4-point move. Now, market continues to drop. We have another new low on the premium here. It continues to move down. But now notice this here, right here. We have a new high on the premium right here. 9:23 a.m. Spoos are at 11:32. So at 11:32, that's the target. Spoos are moving down. We look for an opportunity to take a long trade. Maybe we get in here. I'm not going to even talk about where we get in right now. I'm just looking at helping you to see what the strategy is. Spoos are going to rally back to 11.32 according to the premium. So now we want to take a long trade. Taking a long trade in here doesn't quite make it. Spoos sell off some more. Taking a long trade in here, ultimately that works. And as you can see, it takes all day to do that, but eventually, boom, it finally occurs. There was as much as a 6-point move there, along with a 4-point move that could have been had on the initial premium setup. It's an excellent opportunity for trading. So once again, the question is there anything in particular that may have been helpful to know when to take a long trade? Sorry for the interruption. All right, we're looking at a 6-tick VIX chart with our gap indicator on it. And you'll notice the red lines here. These red lines are gaps. Those gaps are associated with the origination point here on the 12th of January. As the market had moved up, left 2 nice gaps. Those gaps today were filled. And there they are. So right there, right after 10 o'clock, in that neighborhood, we'd be looking for an opportunity to take a long trade. Now, above and beyond that, there's not much more that we can say without going into greater detail, which is not the subject of our video today. But there's where the gaps are filled, right in here. Popular man today. All right. I think you see the point. This is where the gaps showed up in the VIX. So, few ticks later, opportunity for a long trade. Use whatever indicator you might want. Opportunity to get in. Potential 6-point rally before the premium is satisfied. And not to mention, and I'm just going to mention it, there was a gap at 11.3250 as well. Okay, we had another gap at 11.3275 right thereafter, but there's the gap at 11.3250 that gets filled, that had originated much earlier during the day, prior to the, or while the market was selling off. There was where the gap started at about 9:20. So there you have it. Rod Kusin and Spooman for Risk.